The U.S. Central Bank, the private Federal Reserve, continues to claim that the U.S. economy is strong. But yet this past week it initiated monetary policy as extreme as last seen during the worst financial crisis since the Great Depression. Early morning Tuesday of this past week, the Federal Reserve sprung a 50 basis point cut, a supposed surprise on financial markets, only to have the debt market respond by further front-running the Fed's likely additional interest rate cuts coming, likely back to zero. Bidding for both U.S. bonds and T-bill yields went sharply lower all week. And even supposed Treasury inflation securities, known by the acronym TIPS for short, are now trading at negative yields. Given that the real rate of inflation data has been rigged ongoing since the year 1980, there is, and has now for a rather long time, not been such a thing as inflation-protected U.S. Treasuries. Coincidentally, now at historic 150-year low rates, just a few weeks ago we highlighted how gold performed about 150 years ago, the last time the nation had massive full fiat currency issuances and interest rates this low just following the U.S. Civil War. If you missed learning how gold and silver bullion bull markets perform versus greenbacks or in stock bear markets, stay tuned to the end of this week's update for a few-week-old video entitled Gold Price Going to $2,000 per ounce. What if stock bubble bursts? This past week, too, one of the most candid silver and gold bull and billionaire bond traders in the financial markets gave the Bloomberg news team a long explanation of his current thinking regarding financial market gyrations. Here are some highlights.
Let's bring in Scott Minerd, Guggenheim Partners co-founder and global chief investment officer. Scott oversees about $265 billion in assets for Guggenheim Investments, and he joins us now by phone. Scott, thank you so much for taking the time to speak with us once again to follow up on our conversation from Thursday. Tom and I were just calling this a shock and awe effort from the Federal Reserve. If it is that, what kind of market reaction would validate that shock and awe effort?
Well, Scarlett, I think that what you would need to have validated is we would have to close higher on the day than where we closed or the highs of yesterday. I don't see this having much impact at all. I think whether the timing of this event was today or it was at the next meeting is fairly irrelevant. I think inevitably the Fed had to act because they needed to demonstrate that policymakers are not asleep. But in terms of their ability to really affect an outcome here, a rate cut, for instance, is not going to improve earnings materially. A rate cut is not going to cause people to feel better and decide to go out and spend money.
Now, Scott, take the macro mumbo jumbo and bring it over to the fragility of the market, negative 500. Bring up the data as we speak here, negative 500 right now on the Dow, and I see interest rates beginning to crack. Scott, are you framing for a 1% or lower full faith and credit curve?
Yeah, I think, Tom, when I look at the technical state of the market, I'm not surprised we got a bounce around 3,000, which is basically what I said on the show last week with Scarlett. But, given the fundamental backdrop and you overlay the technicals in the market, I see, another 15% decline, maybe even more from where we are right now in stocks. And, when I turn to the bond market, I think that we're going to continue to see the Fed have to ease. And, I believe that our target of 25 basis points on the 10-year note, or 1/4% of a 10-year note, and 1% on the long bond are almost inevitable at this point.
It is so important, Scarlett, to frame here the outlier nature, and I mean this with great respect for Mr. Minerd's work, but the outlier nature of that call of 25 basis points. Yep. What does that do to the banks? What does that do to all of our viewers and our listeners worldwide?
Who have savings.
And what does it do to the actuarial assumption of our retirement plans? I'm never going to retire. You're never going to retire if we get a Minerd world.
Well, all we have to do is look at what happened in Europe, right? I mean, they're living with negative interest rates. Scott, you say 25 basis points. How do we get there? How quickly do we get there? Is it a jagged line? Will it go in stages? Will it go back up to 1% before 1.25%, 1.5% before it gets back down to a quarter point?
Scarlett, I was more hopeful of a retracement when we found support on the stock market. What's interesting is that we're getting the knee-jerk reaction out of stocks here, which is the monetary. We've been trained that when the central bank steps in, that's a sign that you should buy stocks, and that mechanism doesn't work here. And so I think the idea that we're going to retrace all the way back to 1.25 is pretty unlikely. And I would tell people that even though you may have sticker shock here at 1% on the 10-year note, you probably shouldn't wait to put in more money to work if you're underweight duration.
Scott Minerd, what do you see at Guggenheim? Anecdotally, on the Guggenheim Wall Street, what do you see right now?
As we see, I think the high-yield bonds and credits in fixed income continue to deteriorate along with stocks.
Okay, so in terms of those opportunities, do you want to jump in now, or do you want to hold off for a bit to wait for, let's say, the Fed meeting on March 17th and 18th for them to announce more?
I think right now, and until we find some clear visibility on earnings and how this virus is evolving, I think it would be premature to be stepping in now, other than maybe to buy U.S. Treasuries. Or maybe, things like gold or silver, as defensive assets. I think that, it would be premature. Even, it's really interesting. If you go back to the financial crisis, in 2008, all the right things were put in place that told us that the financial crisis was going to come to an end. Mm-hmm. But the market didn't bottom until 2009. And so I think there's no need to rush in here and try to put money to work right now.
Juxtaposed next to this week's volatile and potentially bursting stock and bond market bubbles, the price for gold showed some serious upside volatility and looks to be finishing the week up over 100 fiat Federal Reserve notes per troy ounce. It seems we're not too far away from days to come when the gold price intraday move up and down 100 per troy ounce or more. Some of you out there will know this little known precious fact, but since the year 2015, the CME Group's COMEX NYMEX futures markets, they have had circuit breaker rules on their books regarding intraday silver, gold, platinum, and palladium derivative betting price swings. These rules are still in place. Special price fluctuation limits, which cover 4 levels for each respective precious metal that the COMEX and NYMEX trades. For NYMEX palladium futures and options contracts, this daily circuit breaker price volatility range has likely already been triggered multiple times to date, beginning that the level is only 50 fiat Fed notes per troy ounce in intraday moves. But perhaps the COMEX is also eventually expecting silver derivative intraday price gyrations, ranging anywhere from 3 to 12 fiat Fed notes per troy ounce on a daily basis in the years upcoming. For COMEX gold and NYMEX platinum, the circuit breaker intraday price volatility ranges from 100 to 400 per troy ounce, movements both up and or down per each trading day. Measured by currently escalating gold bullion prices, platinum is now hitting extremes akin to the peak gold-silver ratio reached during the Great Depression, when silver bottomed at 25 cents per troy ounce and when gold was confiscated by coercion and arbitrarily priced at $35 per troy ounce for near 4 decades to follow. This week, we're going to focus in on the potential long-term opportunity in platinum bullion currently. Hello, this is James Anderson speaking on behalf of sdbullion.com. If you have a bullish, medium, and longer-term outlook for silver and gold's future values, or perhaps you've seen palladium's record-breaking price performance over the last handful of years, you might want to currently consider platinum bullion, specifically as a long-term store of value with a limited current downside versus a possible escalating valuation upside in the years to come. In the remainder of this video, we're going to cover the current value proposition for platinum bullion. And to begin, we'll let one of the world's largest platinum miners speak about this very rare precious metal in the 21st century.
Platinum, a precious metal that has always been valued for its beauty and its rarity. Today, we're unlocking the power of platinum and platinum group metals to benefit all of us in many different ways. Platinum already enables the catalytic converter in our cars to strip away harmful gases from emissions. It's used in the production of fertilizers to help grow the food we eat. It means the screens on our mobile devices can be lighter and stronger. It allows a pacemaker to control the rhythm of a human heart and can even help save lives by slowing the spread of cancer. At Anglo American Platinum, our vision is to build on the ways we currently use platinum to create a better future for society. We've been mining platinum group metals for nearly 100 years, evolving what we do and how we do it to become the world's leading platinum producer. Now we're at the forefront of the platinum industry, focusing on safe and responsible methods. We operate world-class assets and are forging new frontiers for these exciting metals. We're making PGMs an easy and attractive investment choice by increasing their availability and offering new products. We led the establishment of the World Platinum Investment Council to be a trusted provider of data and insights, and to promote platinum as a long-term source of value. We're also busy creating new markets for platinum jewellery, most recently in India, where the potential for growth is huge. But it's an industry where new applications of PGMs will have the greatest impact on society and the lives we touch. So we're actively supporting research into some amazing innovations, like hydrogen fuel cell technology. This modern, clean power source, powered by platinum, has only one emission: water. We're partnering with companies that are leading the use of fuel cell technology in electric vehicles or as standalone power generators. And with our venture capital fund, we're investing in infrastructure for hydrogen distribution and storage to support the growth of the hydrogen economy. We're also investing in many other exciting applications for PGMs, such as water purification, electronics that are faster and more durable, medical equipment, data storage, and even technologies that preserve fresh food naturally. At Anglo American Platinum, we see an exciting world of opportunity, one that we are creating together with our partners for the benefit of everyone.
Anglo American is indeed one of the world's largest platinum producers, all of which are located in South Africa, the country that regularly produces about 3/4 of the world's entire fresh platinum supply. News was reported today that this same major platinum mining consortium, Anglo American, is drastically cutting its platinum production for the year 2020 by perhaps over 30%. The spot price of platinum jumped on the news, closing above 900 per troy ounce today, a still super depressed valuation by many long-term historic measurements. During this petrodollar, full fiat reserve currency era, now almost 50 years in the making, the ongoing price for barrels of crude oil mimics much of the price action for platinum over the same time frame. There may be some further downside to come for both crude oil and platinum prices, but this most physically rare of all the four major precious metals has underperformed its peers in price for almost a dozen years now. After selling off dramatically in the wake of the financial crisis from its 2,280 per troy ounce price peak to a recent bottom below 800 per troy ounce, platinum has yet to really regain its luster. But if platinum's somewhat recent full fiat currency era past is any inkling of its potential future, platinum bullion at these current valuation levels may be a great long-term valuation play. In order to have a fundamental discussion about platinum's future price potential, one must always consider its sister precious metal, palladium. Both of these precious metals are often used in catalytic converters, helping pass increasingly stricter gasoline and diesel engine CO2 pollution requirements ongoing. As you can see based on recent annual demand, palladium on the right is mainly an automobile demand-driven market, one that is in a severe physical supply shortage at the moment. Escalating palladium price records now have palladium valued at a 120-year high point versus underperforming platinum. The question on many people's minds today is when will we begin to see catalytic converter thrifting from palladium at near record high prices for platinum? Looking back at ongoing demand, it still remains common knowledge around the world that platinum is rarer than gold. And thus, platinum's jewelry demand from wealthy Eastern nations like Japan, China, and India is likely only to escalate with such low historic platinum prices at the moment. Currently, gold is two-priced at an all-time high versus platinum. The gold-platinum ratio closed today at 1.85, a level so high it would now literally spring off this 120-year monthly ratio chart you are looking at. This is the ongoing supply-demand data for platinum over the past decade, with the year 2019 forecasted partially through its full data recuperation completion. Less than 6 million ounces of newly mined platinum gets brought to market every year. This is less than $6 billion in fiat market cap per year. Platinum is an extremely small precious metals market. About 1 year ago, I decided to test the newsletter writer claim that all physical platinum in the world could fit inside an average US citizen's two-car garage or living room. After days of digging through decades of mining data and transparent physical platinum depository holdings around the world, a conservative estimate was that there are perhaps 8 million ounces of 0.999 fine platinum bullion being held by investors, suppliers, and/or speculators total. And all of it could possibly get cornered, and possibly too, fit inside of a random billionaire's walk-in closet. Platinum is very difficult to melt, requiring over 3,200 degrees Fahrenheit to do so. Virtually worthless to Spanish conquistadors who could not get fires hot enough to melt it, with little clue as to its unique elemental characteristics that give platinum such a bright future for industrial applications to come. Platinum is so dense and heavy that most of it on Earth sits deep within the molten mantle and planetary core. If this platinum cube you're looking at was 6 inches on each side, it'd weigh as much as an average human male, about 165 pounds. Platinum, like all precious metal elements, is only originally produced by star explosions, and during a currency crisis, in its physical form, it is most certainly a store of value. Given today's known physical precious metal market data, platinum bullion is some 500 times rarer than silver bullion and more than 300 times rarer than gold bullion in its physical form. And since the platinum price crash and the 2008 global financial crisis crescendo, investors around the world have been betting on platinum as a long-term value buy. And while its price has certainly disappointed many over the last many years, platinum bullion bets keep increasing seemingly every time its price falls near long-term support. In terms of platinum's past price performance during the last near full fiat currency system meltdown in the year 1980, the price of platinum, like all major precious metals, reached a then all-time record price high only months after silver and gold did. Our contention here at SD Bullion remains that this 21st century bullion bull market will likely peak in a crisis of fiat currency values and confidence. It would not surprise us to again see all 4 major precious metal prices making all-time fiat Federal Reserve note price highs again within a similar time frame as they did some 40 years ago. Palladium currently foreshadows the other 3 major precious metals, their current and future wall of worry climbs to eventual record price breakouts too. At these current historically low valuation levels, you might consider adding some platinum bullion for the long term to come. If you enjoyed this content, be sure to give our video a thumbs up. If you're not subscribed to our channel, do that. And finally, be sure to hit the alert button so you don't miss these market updates as they come along. Give us your comments below. Let us know what topics you want to see more coverage on.